You want to take it away? You want me to try?
You can try if you want.
What's up, everybody? We are back with another episode of Off the Charts. You do it. What's up, everybody? We are back with another episode of Off the Charts. I am Steve Straza. This is my co-host, Sean McLaughlin.
What's happening, everybody?
We're doing something a little bit different this week. I'm excited for it. This is like a solo pod, but it's like a duo pod. So it's Sean, it's me, it's no guest. And I think this is a really good time to drop our first episode like this because there's a lot to talk about. Not so much what's been going on, the price action and all these developments in markets, but more, how are we handling it as traders? So that's what we're trying to do here today.
Right. Look, we had recently, I don't know what you want to call it, a volatility event, perhaps, where, I mean, it seemed like for about 36 hours that everything was broken. The shit hit the fan. And now we've pretty much, at the time we were recording this, we've pretty much snapped back and retraced everything. And VIX is back down to normal levels. And it's almost as if like nothing happened. But in the meantime, there was a lot of action. And Steve and I thought this would be a good time to really, talk about what we went through as traders, right? Because when the shit hits the fan, that's when we find out what kind of traders we are, right? That's where we find out if we're disciplined, where we have holes in our strategies, right? That all that gets exposed when things don't go according to plan. And look, you and I and everyone else woke up a couple of Mondays ago to a VIX with a 65 handle at the open. What the heck? Why did that even happen, Straza? Do we even know why that happened?
No, honestly, just the action about it was one of the most significant volatility events in history. The way the VIX spiked and was up 250% at the open, like 2 Mondays ago now? We haven't seen something like that. We haven't seen the VIX this elevated since the pandemic. It's all the yen carry trade stuff going on. But I think that just like we look back a lot of cycles and can say this, the writing was kind of on the wall. Things started to move in the wrong direction. Things were kind of acting funny. Small caps were already kind of not following through on the strength that we saw in July. Regional banks the same. So there were a couple of groups that I feel like sniffed it out. You would say nobody knew what the Bank of Japan was going to do, and that's kind of what tipped everything over. But it seemed like the price action for a couple weeks leading up to it was iffy. Wasn't the best.
Yeah, and we've seen VIX at a 65 level a few times in the past, but when you go back and look at the charts and you look at what was going on in the world, when VIX was at 65, there was some real shit going down, right? We had the great financial crisis, we had COVID, we had the .com blow up, we had all these things that when you look back, like these were real events. But when you look back at what's going on right now, I mean, a year from now, 5 years from now, are we going to look back at 2024 and be like, what the heck was that about? Like, there's no real, I mean, yeah, the yen carry trade, but was it really that big of a deal?
Yeah, it's going to be one of those things that you're going to be able to see on the chart, the volatility index chart. You're not going to see it on stock chart when you look back 10 years from now. But on the VIX, they're going to have to call this something. Yen carry trade.
Yeah. Right? Can we throw our hat in the ring for giving it a name here?
I would say the BOJ shocker.
Okay, we'll workshop that one. We got some work to do, but it's crazy. And look, this is a podcast where we don't typically talk about what's going on in the world. We're not talking about charts. We're talking about the life of a trader and the stuff we go through. And look, I'll be the first to throw my hat in the ring, Straza. Going back to that Monday, the day when VIX was at 65, from that day until now, I did one great trade. And I wish that was the only trade I did. And I probably should have only done that one trade. Everything I did since that time has been just churning and burning. And I'm talking specifically about an index options trading strategy that I do. It's not the things we do for All-Star Options. This is my own thing. On Monday morning, the best trade I've ever done, I don't want to say ever in my life, but it was the right trade at the right time, right at the open. I sold, as an options trader, I sold an out-of-the-money strangle in the QQQ. So I sold way out of the money puts. I sold way out of the money calls. I got a ton of premium for it. And if I did nothing else, Straza, since
Yep.
that point, so it's been now 2 weeks since that happened.
That was the
Boy,
day of the VIX spike. So you're talking about Monday, August 5th, right?
Monday, yeah, Monday morning, the first trade. I mean, a minute after the bell opened, I sold that strangle, and it was a great trade, a wonderful trade, and I killed it in that one trade. But if that's not the only thing I did, unfortunately, I traded like an animal for about 5 days after that, with the net effect of just churning away profits and churning away commissions and making my broker happy.
Yep.
Didn't really make any headway, and man, it was frustrating, very frustrating. I did a lot of work for no effort. Had I just done that one trade on Monday morning and just did nothing else, I'd be smooth sailing. Would have been great.
When volatility spikes the way it did that Monday, it's what can you really do as an options trader? Especially if you think that the selling's not over. Longing calls always makes the most sense, right? And betting that the lows are in. And that happened, right? So as bad as Monday was, that was also the low. If you got long calls, you paid a lot for them, but they probably still worked, right? Because everything's bouncing now when we look back a week or two.
Well, I mean, let's think about the trade that I did, and this is a very specific trade. It was in the Nasdaq QQQ, right? I told you I sold an out of the money put and I sold an out of the money call. The puts obviously worked. I sold them. I don't know what the prices are, but I bought them back for a fraction of what I sold them for. Great trade. The calls on the other side, Straza. I think I ended up losing just a little bit, which was fine because I made a shit ton on the puts, but I think I ended up losing a little bit on the calls. So if you flip that around, if I bought those calls, I really wouldn't have made a whole lot of money, even though I got the direction right, because volatility was so high, right?
Absolutely. Listen, the volatility crush stuff, I feel like if you pick your spots though, and you're in individual stocks that are bouncing like really well, the volatility crush, does it really, if you get the direction right on a day like that, even if you pay up, you think that volatility could make or break like one of those trades? Like you get the direction right, you bounce for a couple of days with a little bit of follow through, volatility comes down a ton, right? So
Yeah.
the value of those calls, it's working, all things equal, they're coming down. Can the volatility alone bust a trade?
I think in this case, yes. This was not normal, right?
Because of the historic move in the VIX.
Right. This was not a normal VIX spike. Like when we talk about VIX spikes, normally we're talking about a VIX that went from 15 to 25, right? Not from 15 to 65. So normally, Straza, you're probably right. Normally when volatility is rising and you're picking a bottom in a stock, yeah, you're going to pay up for those calls. But you're paying high premium, but you're going to get the move and the delta is going to work in your favor and you're going to make money. Maybe not as much as you wanted, but it's going to be worth your while. But this was a very specific event, very unique. I mean, how many times have we seen a VIX at 65 in the last 30 years? Maybe 4 times, 5 times. I mean, it doesn't happen very often.
Yep.
Yeah. But and that brings up a good thing to talk about, right? Like we had a market where it went outside of the expectations, whether you're a bull or a bear. What happened when we woke up on Monday morning and saw where the stock market was opening, that was outside of everyone's expectations. So you saw it. I mean, we saw people talking on Twitter. We listened to Twitter Spaces. We saw the people on the TV. We read the newspapers. I mean, people were panicking. It was a real moment that lasted, I mean, I want to say a good 36 hours where it really felt like people were really panicking. And I mean, is panicking ever worth it in a situation like that? I mean, have you ever done the right thing, Straza, when you're panicking? I don't feel like I have.
No. I would have preferred to not even be in front of my screens that Monday because, like you said, it's not that I'm going to do anything crazy at this point, but there's no reason for me to be there. Like I'm a big let the dust settle kind of guy. And so what's happening for me now is I was one of these people who thought dead cat bounce, like what a weak rebound rally. We're going to go retest the lows. We were on, one of our shows together Monday talking about buying puts, right? Betting on this little bounce kind of being over. I'm reducing my exposure, my long exposure for a couple weeks now, right? And then you end up being wrong on that tactical call, right? So I'm buying puts, I'm lightening up on my long exposure. And then the last 2 days, We're reclaiming VWAPs, right, from the pivot highs and the major averages, which I didn't see coming, right? We've more than retraced 38% of the decline from the July highs. S&P is 62% now. So it's starting to look like not only are the lows in, but maybe we're heading back into rally mode, back to new highs at the index level. Now I got to get long again as a trader. That's like one of the toughest mind fucks when you're making these tactical decisions and then you end up being wrong. So like today, I'm in there and I'm buying calls again. Monday, I'm buying puts, but I think that's just what you have to do.
No, absolutely. It's when things like this happen that are out of the ordinary, right? People make mistakes. They, they're a lot of people make mistakes for one of two reasons. Number one, they're trying to repair a bad situation, right? They're in some bad trades, and instead of just getting out or maybe sitting put, instead they dig themselves in a bigger hole and they make it even worse than it needs to be. Thankfully, I didn't do that. It doesn't sound like you did that, but no. It happens, and we know people that happened too. The other people that when markets get weird is maybe they're not in a bad trade, but they think, oh, now's the time. There's a great opportunity. There's blood in the water. I got to get aggressive, and here's like the buying opportunity of a lifetime, and they too get in too hard, too heavy, and go overboard and make mistakes, and they get whipsawed and churned out or whatever. Sometimes the best thing is to do less. And I'll speak for me, like as I'm kind of doing the postmortem of my trading over the past 2 weeks. Yeah. The one mistake that I made that I would like to do, I'd like to have a do over it. And I'm not talking about like I shouldn't have done this trade or I shouldn't have done that trade. Like mechanically, what I should have done is I should have kind of widened my parameters of when I'm taking entries and exits. So I'm not going to get into the weeds of what I'm doing with my strategy, but normally, let's just say, for example, if I'm entering positions every dollar up in the Qs or every dollar down, in a normal market that works fine. But when the volatility spikes and all of a sudden the daily range is 4 times what you're used to, maybe you need to widen your parameters and maybe not trade every dollar. Maybe you add your position every $2 or every $3 because, there's so much movement there. And that would have kept me from over trading and churning and paying a lot of commissions. And I would have been certainly a lot happier as a trader. I mean, I don't know about you, Strez, but I was just because I was trading so much, I was stressed, not because of the market. Like I wasn't stressed about making or losing money. I was just stressed about having to act a lot. I was making a lot of trades, a lot more than I like to make. Yep.
It happens around these moments. And I think for me, when that happens, right, because I'm lightening up on exposure and I'm looking at things and I'm like, this is probably a valid top. While in another environment where I'm not concerned about the tape or the selling pressure or the intermarket stuff or the yen carry trade, I'm like, oh, that's probably not a top, right, in the context of a bull market. So now I find myself, okay, I'm out of something because I thought it's, reversing, peaking, and rolling over. Now that top fails. I'm buying it back. And when I'm doing that too much, I'm in, I'm out, then I take a step back, I go for a walk, and I'm like, okay, you did the right thing, like lightening up on your long exposure, right? Because when the market gets like this, where I'm getting chopped up and I'm in and I'm out and I'm in and I'm out, really the best thing to do is probably have more cash and just less long exposure in general. But it's frustrating when that happens because now I'm looking at this bounce attempt and I'm like, maybe I should have been getting more long, not less long. And that's just the trader's mind. It's normal to feel that way, but I think you have to stay the course. We don't know what's going to happen, right? You can always buy them back at higher prices in the future. But at the same time, this kind of chop, this kind of volatility, getting shook around. I think I want to be long. Now I want to be short. Now I want to be long about the same thing 3 different times in the same week. That's the kind of market where actually, when I take a step back and think about it, I don't want to be that long in.
Yeah. Now let's talk about the psychology of traders after an event like this. Mm-hmm. I know I've been guilty of this in the past. I don't think I'm guilty of it now, thankfully, but in the past, I've been guilty of this. After a big drop in the markets and a big spike in volatility, when we start bouncing, we have that first bounce and, everyone knows the bounce is coming and then it comes, right? But then where the trouble starts for a lot of traders is they're of the mindset of, oh, we're definitely going to retrace the lows. We are definitely going down and everybody's calling for, the next leg and everyone's trying to pile in on every downtick in the market, and they end up getting churned to death. What's going on, do you think, with traders in that situation? Like, is it Is it a kind of like a revenge trade because they missed the
Yeah.
first down move and so they're trying to make it back the next time, or you're not going to, I'm not going to miss it this time, or what is it? Is it greed or is it fear? I mean, I can make an argument that it's both.
Like you were saying about trying to repair a bad situation, I think that a big problem for a lot of traders, especially early on, is holding out hope when you make a wrong call, especially people who are coming out like us and talking about what we're doing in our accounts. That's even harder, right? Because then you got to deal with an extra psychological dynamic. Those of us who are good at this can ignore all of that noise. But when you come out and you say something and you tell your customers and your clients, I'm lightening up, I'm feeling extra cautious now, right? And then you end up being wrong. Like I'm saying, we're reclaiming VWAPs. Maybe I'm wrong. We're not going to retest the lows. I was one of those guys thinking we're probably going to retest the lows, literally Monday. Now I'm looking
I was with you. I was with you.
and now I'm looking at it. It's 2 days later, and I'm like, we're probably not going to retest the lows at this point, right? So you have to just swallow your pride, admit that you're wrong, and maybe undo some of the actions that you took, right? Lightening up. So you have to have speed to take in new data, change your mind, and then be able to, at least for us, explain that and explain why in a way that makes sense so that you don't look like the crazy man who's long and then short and then bullish and then bearish, right? It's more of a when the facts change, I change my mind. Why not, when markets look the way they did last week, lighten up a little bit? Now that this rally attempt looks a lot better, only 3 sessions later, you can undo those actions, right? And maybe put on more exposure. So I think to be able to just kind of have the mindset of, okay, I'm wrong. It's not about right or wrong. It's about making money. I wanted to protect my money 3 days ago. Now I feel better about it. You just redeploy. But it's one of the toughest things. It's one of the toughest things. I'm struggling this week.
That's interesting. You just made me think about how, like, let's say 20 years ago, you had market pundits on TV. You had like the Jim Cramers of the world and people like that who are out there, putting out ideas. And then, you and I in our roles, we're putting out ideas for clients and we're going to get it wrong from time to time, and we have to own that. And it's part of the business. But in a world now where everyone has a microphone, right? They're on Twitter, they're on Reddit, they're on StockTwits, they're making YouTube videos. Anyone with an internet connection can do this. And a lot of people are. Do you think that a lot of traders now, because they're putting their ideas out there in social media, like, do you think it in some way makes them dig in on their calls in a way that maybe they wouldn't do that if they knew that nobody was watching?
Yep. And I that's a trap I fell into just 5 years ago when I first started talking about my calls. I wanted them to be right, and I was more likely not to believe that they were wrong when evidence was showing me that they were probably wrong. Yeah, you dig your heels in. You don't want to admit it. You look the other way. It becomes a hope trade, right? And it's dangerous. So the right thing to do for people like us is to, like you said, just take ownership of your wrongness and explain that, yeah, I'm wrong all the time. That's just part of doing business, right? And be able to reverse course and remain, flexible and open-minded and switch it up. And the other part that is hard, the next step of that, right, is that a lot of the people that we're talking to don't understand. Well, how could you be bearish yesterday but bullish today, right? And I think when we can do our best, we can write blog posts, we can come on shows like this and talk about why that's the case. But at the end of the day, if they don't get it, that's not my problem. You can't bog yourself down in all of that. Stop reading replies on Twitter and stuff like that. Yeah.
Well, I mean, it's true in trading and it's true in life, but we can't care about what other people think. Right. We have to take care of our own business. We got to take care of ourselves. We got to do it as honestly as we can, of course. But if you're just, Joe Twitter guy and you're talking about some stock that you like and you've been talking about it for a week and the thing gets killed, it's okay to get out of the trade. It's okay. You don't have to, it's not part of your identity. Don't make it part of your identity. Do the right thing. Risk management is job number one. Forget about your image and what people think of it and any blowback you might get from somebody who followed you into the trade. Hey, markets change fast and they change faster today than they ever did, I feel like, or at least sentiment changes faster than it ever did. And you got to be willing to make a change and do the right thing. That's it.
So I also think that context matters, right? So I was thinking the other day, this has been a tremendous bull market, Sean, right? Made a lot of money, been aggressively long since late 2022 now. I don't know if it's over, but I'm going to protect some of those gains. If you bought Google or Nvidia common stock just when the primary trend reversed in late 22, early 2023, how many price targets have been hit by now? And you think you should still own the same amount? The easy money has probably been made for this cycle, right? So say I'm wrong and I take off half of my Google, half of my Nvidia. I want to totally lighten up on tech stocks and they go on to hit another target. I don't think I'm going to look back a year from now and be like, man, you really fucked up, right? If you're up 2x on a position right now, a common stock position, this bull cycle, are you crazy to take profits? I don't think so. So it's also like, where did you come from? And I think that can be anchoring to, how did I do this cycle is important, right? We get in on time, then maybe we get out a little bit early. It's not the end of the world. So maybe that's just something I'm telling myself to make myself feel better about the exposure that I've reduced in the past few weeks. But I really, genuinely think that, yeah, there's something there.
Yeah, hindsight is 2020, of course. I was just having a conversation with a guy this week who he had been in NVIDIA, since you brought up NVIDIA, just reminding me of it. He had been in it for years now. He was in it before the big spike. So he wrote it down a little bit. He was sitting in some losses, but then he got, the monster mother of all moves. He rode that whole thing. But not a but, he sold into the rally that happened when they announced the stock split, not the actual, when the stock split actually took place, but when the announcement came out, I think the stock was trading around $1,100.
So he sold in June. Yeah.
Yeah. He sold then. And, he was kicking himself about it a little bit because it continued to rally. It rallied another couple hundred points before the split. But you know what? It's now down below his basis or where he sold. And, not that him selling higher makes that the smart decision, but what he really, and we talked about this the other night, I was trying to tell him, hey, you did a good thing. What he avoided was significant portfolio volatility in both directions, right? I mean, whenever you think about your portfolio and your positions, the volatility we're always worried about is the down volatility, right? Like if you lose 20% of your portfolio, that sucks. And that is a problem, right? But what people don't talk about a whole lot is when your portfolio goes up 20 or 30 or 40% in very short order. Yes, that's a good problem to have. That's a first class problem to have. But when that happens, a lot of traders, myself included, tend to make bad decisions at times like that because you're either you either make the wrong decision to take profit because you're afraid of giving it all back and then you sit on your hands while the thing goes up another 500%, or you double down in the position. Oh, it's up 50%. It's going to go more. And you double the position at absolutely the worst time. I feel like upside volatility is just as rife with trouble than downside volatility, any volatility. So I think if you're sitting on big gains in a bull market, there's nothing wrong with taking a little off, at least to take some of the heat off of your intraday volatility, right? I mean, it's tough.
There's also something to be said about like the mental capital. Like you ride that easy trend in NVIDIA when the market's nice and the VIX is at whatever the hell is in the teens, right? Low teens. That's when you want to ride these tech stocks, right? When markets get shaky and you start to worry and stuff. And in the case of the story that you told, this guy's probably up 5 to 10x on his position.
Yeah.
You sell that every time. You sell that every time, right? When things get messy, things start to look dicey, the intermarket changes, we got credit spreads blowing out. I don't know what the hell is happening in Japan. You're up 10x, shouldn't even be a thought. So I think like where did you come from? That context really matters.
And you don't have to sell the whole position, but sell a little bit just to take some of the heat off, at least book some gains so that you're in a position of strength. We talk about it as options traders. When we're long calls, we like to sell half when we're at a double. We do that because at least we know worst case scenario, we're walking away unscathed, right? The thing could totally reverse on us. We're not going to lose any money at that point. And that gives us a position of strength to keep holding for, a potential bigger leg.
Yeah. So, all right. I want to talk about maybe one thing that I've done right in the past few weeks. Let's
talk about something you did right. I want to hear it. This is good.
So I started lightening up, right? tech is hitting targets. Tech is, hitting the dot-com bubble highs on relative basis. A lot of the leaders are hitting the first Fibonacci extension after the prior cycle highs have already been taken out, right? So it's like, in other words, levels have been hit in some of these tech leaders where I would look back, and if the cycle ended right there, I'd be like, yeah, that makes sense, right? They took out the prior cycle highs, hit another target or two, then they rolled over, and that was it for a while. Okay, I have no idea, right? So you lighten up a little bit, feed the ducks a little bit as you go. Did some of that. Also, just paying attention to what works and what has stopped working. So you know a lot about this. Been selling puts all year in things that look like tops, but that I have conviction are probably not tops. Selling the puts, selling the puts, selling the puts. It has worked so well over and over and over and over again. I don't even think I got too aggressive on the strategy. I started selling puts and things that look like tops again. This was 3 weeks ago. Let me check. I'll tell you specifically, Dell and AMD. This was early August, late July. So I'm selling puts. These are market leaders, AI stocks, right? I'm like, these stocks can't top out here and roll over. Selling puts, got blasted, blown out. Dell was down like 9% the day after I sold puts. That hurts. You're selling short dated puts on something and it's going to be down 9-10%. AMD, same thing, blasted. Got stopped out. Little too late because I was in the barber chair when it was happening. Pissed about that, right? So got stopped out, massive losses. And I'm like, so this strategy that I've gone back to the well all year on, that's worked so well, did not work at all. In fact, it absolutely collapsed on me. Okay. Listen to that. I stopped selling puts.
Right.
Right. Like, so pay attention. Sometimes the best information we get is in our trades. Something that's working, keep doing it. Right? It's like positive reinforcement. If it stops working, that's the market telling you, hey, dude, something is not the same way that it was maybe just a few weeks or a few months or a few quarters ago. So pay attention, listen to that. Maybe I'll sell puts again in the future, but right now, I want to sell puts.
Yeah, I mean, we spend a lot of time, especially you guys, you and the analyst team spend a lot of time looking through charts, looking through relative strength, looking through relationships between different stocks and different sectors. And that's all important work. But sometimes the best information we have is in our own goddamn portfolios, looking at the positions that we have on right now. Yeah. Those are telling you what is happening in the market right now and where you need to spend more time on things that are working and things that are definitely not working. That's it.
Yeah, absolutely. And this happened, Sean, late July, like a week before the yen thing, right? So thank God I wasn't short puts going into that disaster.
Yeah. Look, I think the important thing, if there's any one overarching takeaway here from the talk that you and I are doing right now, is that I'm human, you're human. We all make mistakes. You people watching or listening to us, you're human too. It's okay to mess up and make bad trades. You will make bad trades. You will have trades that lose money. That's part of the business. Where it cannot be forgiven. The biggest mistake we want to make is that the things that we did wrong these past 2 weeks, or at any time really, the things that we did wrong, if we don't learn something from that, at least, file it away in our brain or write it down in our journal what we did wrong. If we don't make a lesson out of that, that's where we really screwed up. That's where the real failure happens. Someone smarter than me said this before. I don't even remember who said it, but they're not losses, they're lessons, right? If you make them a lesson. If you don't make them a lesson, if you just forget about it and just keep going on, then you're compounding the loss. If you learn a lesson from it, then you'll be better next time. The next time something like this happens, you're going to have a playbook of potentially to ride the waves a little bit better next time.
Losing money can be very valuable if you make it that way.
No, you're absolutely right. You're absolutely right.
Serious.
Because losing money sometimes is the best trade ever, because you could have lost a lot more if you didn't take that loss. In fact, this just reminded me, one of my best trades of my career was my very first year trading. I started trading in 1998. I was in a day trading office. There was like 40 others. And it was one afternoon in September of 1998. Market historians will remember that was when the Russian ruble crisis was happening. Market was selling off bad. I was in a bunch of short positions at the time. I was in all the big cap stocks of the day, right? It was Dell, Yahoo, eBay, Microsoft, Intel. I had a bunch of positions on short, and they were working. They were working great. Well, out of nowhere, completely unannounced, at 1 o'clock in the afternoon on that day, Alan Greenspan, the Federal Reserve, announced a surprise 1% rate cut out of the blue. Nobody saw it coming. They didn't have a meeting scheduled. There was nothing. And as you can imagine, the markets just screamed higher and never came back.
Yep.
Well, the best trade I ever did in my life was as soon as that news hit the tape, I had a button on my keyboard that I could, it just one button closes all positions and I never use it. But that one time I smashed that button, closed all my positions. I took a little bit of a loss, but it was the best loss of my career, Straza. I mean, this was at a time when if I made $500 in a day, that was a good day for me. Had I not smashed that button and just sat on my hands, or if I had been in the bathroom or something, if I was away from my desk, I probably would have lost 10 grand that day, which would have wiped me out.
I love this story. So I got to ask you, right? Thought experiment. I used to have one of those buttons too. I used to use Sterling, right? I was a hotkeys madman.
Yeah. Hotkeys, man. That's how you did it.
We're going to talk to Milton about that tomorrow. He taught me.
Okay.
So I don't have that today.
Neither do I.
On any of my accounts, right? And I wonder. I've never been in a position. It's been 6 or 7 years that I have not been able to have the ability to liquidate an entire portfolio in the touch of a button. But I wonder sometimes, should I? Should I be able to do it? I feel, right, that it might do more harm than good, right? Maybe I'll be on tilt one day. I'll hit it, be like, what did you do, right?
Yeah.
I wonder. I don't know.
I feel like it's a dangerous button to have on your keyboard, but boy, the one time you need it, you really want it. And that was the one time I needed it. And I think that's the only time I ever used that button. It was like a combination of hitting like 3 keys at once. I remember, but I don't remember what the combo was, but like, as soon as that thing hit the tape, I was like, bam. And it was it might have been the greatest trade of my career, Straz. And it was a trade I lost money on. I mean, how crazy is that?
That should be the name of this episode. It should be about the abort key. I don't know. I don't know what the right answer is. Should traders have an abort key or not? I don't know.
Yeah. Well, look, we don't need to make this episode long. We thought it would be good to just come in and just, have some real talk. We had a real market event here, something worth talking about, something that we all went through if we're active traders. And I think we'll do more of this, Straza. Next time we have a big market event, whether it's a bullish or a bearish event, we should hop on and do this again. I think, if nothing else, it's good for you and me to just talk this stuff out, right? Help us feel better about what's going on.
This is free therapy. The rest of you just get to listen to it.
Look at that. I didn't have to pay you for that. That's great.
Listen, I'll just wrap up with, I think there are environments where you could be more aggressive. You could be more creative. You could jump entries. You could take a little bit more risk. Maybe you do something a little bit risky, throw on the risk reversals, right? Trade some short dated calls, whatever. And then there's other environments where you want to do the complete opposite of that. You want to take less risk, maybe add some defensive stocks, add some cash, sell things into strength as they're hitting price targets, right? Get out of stuff. And I think it's very important to know the difference between those two environments, because that's where big mistakes can be made. And at least right now, for me, it's August 14th, the afternoon. I'm in an environment in my head where I don't want to be doing the risky stuff. I don't want to be aggressive with my entries. I don't want to be jumping entries. I don't want to presume that something's going to break out or that some reversal pattern is going to complete. We did that last year. It worked. That's stopped working for now, right? So we could change our minds, and that could change in the future. But for now, I want to be taking profits, when things look dicey. I want to be keeping positions smaller. I don't want to be, trading long calls aggressively, short dated calls, whatever, looking for juice. I'm buying real estate stocks when I'm selling my tech stocks, right? So there's just a different way to act. And there's a time and a place for everything, right? And right now I think is a good time and a place to be more conservative and to try and protect your capital, protect your mental capital, keep your money, for a brighter day.
Yep. Everything you said there is so important. And the reason you have these insights, Straza, is because when the shit hits the fan, things get crazy, you're learning the lessons from that. Whether it was something that you did that was good or whether it was something you did that was bad. There's lessons there. You're doing that. So everybody out there who's listening to us right now or watching us, please take a moment, maybe this weekend, just 30 minutes, just sit down and have some quiet time and think about what we've gone through over the last few weeks. And is there something that you did that you could have done better? Or was there something you did great and you want to do more of? Think about that stuff. Write it down somewhere or internalize it some way. Everyone has their own methods, right? But do something so that all this stuff that we just went through, it's not lost, right? We don't forget about it because we're going to see events like this again. In fact, we might see them more and more frequently. Who knows? So be ready. That's how you win from a tape like this.
I totally agree, Sean. It's a good time to reflect. Like the great philosopher Cypress Hill said, when the shit goes down, you better be ready.
We cannot end it on a better note than that. All right, folks. Be safe out there. We'll see you next week.